I am still in my long. This is my stop loss, and $135,000 is my target. So I hope that fulfilled your dopamine receptors. Now we can talk about some boring shit. Now, what do we have for Bitcoin for this week and potentially next week? Because we are about to hit August, and usually in the first weeks, on the first days of a month, we end up getting these massive moves on the chart. And in case that is the case, these are the levels that you should look out for. Now, first things first, we've got to start with the resistance factors because they are closer by, and we can talk about them and run you through what kind of liquidity setups that you can look out for in case we get a push up tomorrow. I'm going to get rid of this level right now, this position, sorry, and let's mark out some daily levels. Now, daily levels are 2 consecutive candles that ended in different directions. And as you can see, we have one right here, a green candle followed up by a red candle. And this is a daily level sitting at 120,000.1K. The other one is sitting right here at 119.481. And both of these levels are really, really important for me. And let me tell you why. Well, if we look at the chart on the 2-hour graphic, you'll see that this day level is just above these highs. And these highs are the Tuesday highs. So if, in case, we get a move like this tomorrow or today, and we hit this level and you're seeing this level being lost right here, this would mean that we have actually swept some liquidity in the market, and that gives the big players to enter short positions on the chart. So if this level is hit and you're seeing divergences on the chart, what this could mean is a big player has positioned himself for a short and for lower prices for the first week of August. Same goes for this daily level right here as well. It's just above these highs. They are the Monday highs. So if the price is able to go up and take out the 120,000 liquidity and also the Monday high liquidity and hit the daily level right here, this would mean that a lot of people would get stopped out or liquidated on the charts. So when people get stopped or liquidated on the charts, what that tells us is that gives the big players an opportunity to fill their limit short orders. And how do we know if they filled their orders? Well, look at CVD, look at open interest, right? If the price hits these levels and you're seeing these lower highs and lower lows being put in with increasing CVD, which means at CVD divergence, that's a perfect sign that a big player is putting in limit shorts at these levels. So that's why these two levels are crucial to the market. We have one more that is close by to the price as well that comes in just above these highs, and to find that level we gotta go to Exocharts and go to our daily MPOC template. So here we're going to the daily MPOC template right here, and you're gonna see what daily levels that we have on the chart that are untapped. We're gonna quickly wait and for this to load, and here we go. So tick size is 100, and here we can see that the 18th of July NPOC level comes in at 120,000.5. So we go back to TradingView and we just mark that level on our chart like this. NPOC, a daily NPOC level. So these three levels are the closest resistance levels that we have on the chart. Also, those line up greatly with the Fibonacci extensions, as you can see. So potentially we could get a move higher tomorrow on 2nd of August, 3rd of August. And if you're seeing these levels being hit and you're clearly seeing CVD bearish divergences on the chart, which would mean that the price is making lower highs and lower lows like this, and the CVD is doing this, right? This is CVD, and the CVD is doing this, going up and keeps going up like this. This would mean that the small players are trying to long the market, but there's a bigger player who is limit shorting these prices. And if you see this on the chart, that's a beautiful sign, right? That is a beautiful, beautiful potential for a short position that comes in, not there, hopefully, like so. So this would be a potential short position that you can look out for if we get a pump on the first day of August or the first week of August as well. So that is the short that I'm looking for on the chart if it comes in. And there's a chance that this just pumps up as well, right? I am in a long position. If the price goes up, I'm happy. But at the same time, I want to have some shorts on the chart as well in case price comes down. But that doesn't mean that I'm going to take a short right now. If you took a long or a short position over the last 2-3 days, the chances are you've not made much money. So that's why it's so important to wait until we are at the extremes of our range. And what does that mean? Well, the extremes of the range means that we are outside of the value areas of a range. So as we can see right here, the value area high comes in at exactly at the daily level that we have right here. So that is a great confluence for that level as well. And also we have another value area low right here at 117.2. So if you're bullish, right, I can't change that. I don't know if you're bullish or bearish, but if you are bullish on the chart, the best thing you can do is wait until we are at the extremes of a range. So if the price is able to come down on the August 1st, August 2nd, and you're clearly seeing some bullish divergences on the chart, you can start looking for longs in this range. And the same goes the other way around as well. If you're bearish on the chart, if you're looking for lower prices, if you truly believe that the bear market is coming soon, what you can do is wait until we are hitting these extremes of this range, because this is when you have great shorting opportunities on the market. So these are the best resistance levels that we have on the charts. And how about some support levels? Well, we had this support level right here at 116.892, but now that level is tapped. And once a daily naked point of control level is tapped, we don't have that on the chart anymore. And as you can see right now, it looks empty, but let's fill that up as well. If we go to our daily NPOC level template right here, you can see that we have one NPOC level coming in at 117.5K. So we go back to our trading view and we just mark that level down like so. So this is our first support level on the chart. It's a daily NPOC level and it's at a great zone as well. Why do I say that? Because if I pull up the fixed range tool right here, you can see it kind of comes in around that value area low right here as well. So that's a great zone to look for longs. Another one that we can look out for is a session NPOC level that comes in, I believe, at 117,100, but I want to quickly check that out as well. I don't want to give you bad information. So yeah, it comes at 117,255. This is the aftermarket time point of control from yesterday. So actually, yeah, yesterday, today, kind of the same thing. So 117,255. What we do is we go back to our chart and we just mark that down like so. And NPOC, and this is a session NPOC level. So we have two support levels below us at session NPOC and daily NPOC, and we have three resistance levels above us, a daily, and a daily NPOC. So now, what can you do at this point on the chart? If you're in a long position, I would hold on to that. If you're in a short position from a great level, I would hold on to it, because you don't know what's going to happen on the chart. Tomorrow we could get a big move to the upside, or we could get a big move to the downside. But which one is more probable right now? Well, if we look at the order flow and if we look at Exocharts, what you will see is that currently we are still on the higher time frame seeing massive bullish divergences on the chart. If I go to the hourly chart, 2-hourly chart right here, what I can show you is how big the CVD divergence is on the chart right now. Let's wait for this to load quickly, and now we can quickly check the CVD at this low right here. So what was a CVD? Here we can see the CVD was $684 million. Currently it's $717 million. So from this low up to this low, we have seen more than 30 million shorts, net shorts, that came in on the chart right here, right? Even, I mean, I don't want to say short, I'm going to say market sell orders. So we have a lot more sell orders on the chart than buy orders, but price is pushing higher. And this even gets bigger if we start to look at the low that we put in last Friday. Currently, as we said, the CVD is negative $717 million. So if we go back and check out what the CVD is at these levels, you can see it's negative $540 million. So from the low that we put in on Friday up to the low that we put in right now, the CVD divergence is around $200 million. So we have $200 million more market sell orders than market buy orders. That's a big difference. And when you're seeing that on the chart, you gotta lean bullish. And that's what I am right now. Does it confirm or does it guarantee that the price is going higher on the chart? No, it doesn't. We could clearly push down, but we are still more likely to push higher and make new highs on the chart. So therefore, these are the levels that I'm looking for next on the chart in case, right, we get a push up to these levels and we change the CVD structure right here. So if the CVD here is negative $700 million and here you're seeing the CVD being negative $680 million, that's a clear 20 million CV divergence right here. So you're looking for bearish divergences as the price pushes up. And same goes for these levels as well. As the price is going down, if this is negative $500 million, you're looking for that to be negative $800 million as the price is pushing down on the first day of August. So if that is the case, this is a beautiful potential for a long here as well. So again, we have a long position, we have a short position. You can take them both depending on what your bias is. You can have your stop loss below these lows right here, I would say. And you can aim for new all-time highs next on the chart with a take profit one around these levels. So that is how I'm positioned for this week. And in case we get a big move on the chart, right? Let's say the price is able to push higher on the chart and or lower on the chart, that would tell us different things. So let's talk about that quickly. If the price is able to push higher and we are able to go to $130,000 this week, what that would confirm me would be that this was not the range that we're going to have on the chart. If we go to the daily chart or the 3-day chart, what you can see is this range that we currently have is still extremely small compared to the ranges that we have right here, and right here. And as we always like to talk about, Bitcoin ranges. And currently, if this range continues, right, like this, and we could continue being here for another month, this would confirm for us that, okay, the next impulsive move that we have is going to actually have legs, just like this one, just like this one, and just like this one. But if we actually get a move up this week or next week, what that would confirm to us is that this was not a range, but this was just a small accumulation before a big leg up on the chart. Why this matters a lot for me is, as we talked about, Bitcoin loves to range. And if we are pushing higher for more than a month on the chart, that would give us the incentive to believe that the price will actually put in a macro range around these levels right here. So that is why where this range goes is extremely crucial for us. We could still be in the extreme early stages of a range, or we could be in a small accumulation before a big leg up and a range on the chart as well. So if the price is able to push higher this week, what I would say as a thesis is that the price will go up to $130,000 or $135,000 around that zone, and then we'll start having a major accumulation or distribution range around this zone. If the price is able to find support and resistance around these levels and starts to push down on the chart like this, this would confirm me that this was just a small accumulation or a distribution before another major leg up on the chart and another range here as well. So either way, if we don't stay in this zone right here for another 2-3 weeks, I think we are going to have a major range for September and October. So that is why it's so crucial on when we actually break this range. Now, another reason why that is really important to me is because of the positions that I'm in currently. So the current position that I'm in is a long position from 117,600 on Monday right here. And I'm holding on to it, right? I had no reason to close this position, and if this price is able to push up to $130,000 like so, I will most likely take full profits on this long position because of the thesis that I just pulled out. If Bitcoin is able to find another huge move on the chart this week or next week, that would confirm me that we will be around that zone for a long time. So I don't want to hold on to a position that I'm already winning for a 2-month or 60-day period. Therefore, if you are in longs and if this range breaks up to the upside and hits that $125,000 or $130,000 targets, take profits and take major profits on the chart, because more than likely you're going to be there for a long time. And if the price is able to go down, what you should do is you should look for longs. That is 100% guaranteed. I can assure you that if the price breaks down to these zones, look for longs. So that's what I'm going to say to you in this video. And yeah, I'm quite happy right now because I didn't get chopped up. I didn't get extra positions in. I am quite happy in my position. And the reason I'm saying this is because a lot of people on the chart, what I've seen over the last couple of days, is they get chopped up in this range like this. And I've told my team many times, it doesn't matter if we win this trade or lose the trades. What matters is if you're building good habits on the chart, if you're taking great positions on the market, at the end of the day, you'll make money, right? So if If you're struggling with over trading or having too many positions or over leveraging on the chart, the best thing you can do is just stop and take one trade a week. That's what I've told my team for a long time, for risk management, for how you can get better as a trader, because if you're limiting yourself to 1 or 2 trades per week, what you end up doing is you'll end up taking the best trade that you can take on the market. Rather than taking a million shitty trades, you'll take 2 and maybe one will win, one will lose, but you'll still end up making money if you have a good system. Yesterday we had a major down move on the chart that came to 115.742, and I know so many people were stressed at this time, but I wasn't, because I knew what my plan was. If the price was able to push down below these levels, I would be stopped out. But until that happens, there is no reason for me to be stressed, nervous, or close the position just because it's not going my way. So if you want that type of guidance, every single day on the chart, join the tag team and you'll have it with us. As you can see right here on the Bitcoin BTC analysis section, yesterday, when the price was pushing down, rather than being stressed, rather than telling my team, oh, this is going shit for us, I told my team, no changes in the setup or the invalidation. If you took the trade with me, don't leave the trade just because it's not going your way. You'll learn way more from losing a good trade rather than cutting trades because you are scared. And this is what trading is about. Some trades will lose, some will win, but what is important is, are you able to stick with your plan and are you able to commit to your own guidance? So if you want that type of commitment, if you want a team that truly knows what they're doing, join the tag team, because we have so many individuals who joined the tag team many months ago. And you can see here, this is what I'm proud of the most. When I told everyone, yes, last night, I'm about to sleep, everyone holding their positions, you can see, yes, I sold 50% before FOMC, but bought back on the dip, got lucky. Yeah, to the moon or dust, go hodl, yup, I added. This is what makes me proud, because it's not about winning or losing, it's about, are you able to stick to a good plan until it loses? And if you're able to do that for a long amount of time, you're going to see how successful you get. So if you want to join a community like this, learn what we do, learn our system, and have guidance from a coach that knows what he's doing, the link is in the description. And thank you so much for listening to me. If you want more like this, leave a like, leave a comment. I love making these videos because it makes me really happy as well. This is my position. Again, if I lose, I lose. I win most of my trades and I'm really, really proud of it. So thank you so much for listening to me, and I'll see you in the next one. Bye-bye.